Hello, everybody. Welcome back to another episode of the Sunday Futures Show, the first Sunday Futures Show of 2025. I hope everybody had a great weekend. I know there's a lot of sports this weekend, college football, NFL stuff. Hopefully, you guys got some time to relax and take a little bit of a break from the volatility that we had in the first week of September. Or not September, January. I'm already at September. Because there definitely was a lot of volatility in this first week of January. But even with all that volatility, we've got a lot more potential volatility coming up this week because we got a lot of stuff to go through. Not only in terms of earnings that officially start this week, we get the banks, and the banks get to tell us if they did good in Q4 and if they think they're going to do good in Q5. Hint, hint. They're probably going to say they do good in 2025 because, like, why wouldn't they? But the question is going to be if the market reacts to that positively. And then number two, and most importantly, outside of the bank earnings, is we have CPI. And I have some updates on CPI. We're going to look at some macro data in terms of what Tom Lee thinks is going to happen with CPI, what Goldman Sachs thinks is happening with CPI. Got a bunch of other macro charts I want to go through in regards to the Magnificent Seven, which have taken a little bit of a hit to start off 2025. But this week is going to be I think, pretty volatile week simply because we've got the first week of earnings and the market's going to digest that. But we've also got really important inflation data that maybe the market's priced in, maybe they haven't, but we're going to see over the next couple of days how the market ultimately thinks of all this. All right, let's get started. Thank you, everybody, for being here. Edmund, Inked Up, Philip, Sanjay, what's up? What's up? Silly Bunt, Sarah, thank you all for being here today. Jordan, what's up? Laura, hopefully you guys had a good weekend. Let me know in the chat what you did over the weekend. I actually had a pretty damn productive weekend, dude. Like, I have like 8 things I need to get done over the weekend, and I usually get like 1 out of those 8 things done. This weekend, I got like 9 out of 8 things done. Like, I actually got a decent amount done, and I'm pretty happy about that because usually the weekends I sleep. And I actually didn't sleep like Saturday, Sunday. Like, I didn't sleep today. I woke up pretty early on Saturday, even though I slept late on Friday night, and we got a lot of shit done. So I think it was a really good productive weekend and ready to go into the second week of 2025. Someone asked the question here, and the question is from, I think, Edmund. Amit, did you finally fix the bell? All I'm going to say is wait till tomorrow morning. That's it. Maybe I spent 10 hours potentially fixing something over the weekend. I don't know. And maybe I could do something right now that could show that I fixed it, but I'm not going to do it on the Sunday Futures Show because it's something I want to do in front of everybody on the Market Open. So just wait till tomorrow. It'll be a fun Market Open. That is for sure. Greg, what's up? Sarah, Walt, Gene, what's up? Thank you, everybody, for being here today. Kaos, what's up? He says, everyone, I just want to say Amit is the reason for my divorce. You know, there's been multiple people, again, throughout the years that have been saying, or throughout the past couple months, that have been saying their wives are getting tired of seeing me on the screen. But again, like I say, you know, happy wife, happy life. But to get the wife happy, you need to have some money. And if you're able to get your mind straight and get a little bit more clarity on how to make money with the streams, just in terms of understanding more about what's happening in the market, then I think the wife is going to be okay with it. Michael, thank you for becoming a channel member. Appreciate it, brother. Thank you for being here. And thank you for becoming a channel member. All right, so let's get started. First off, first segment of the day. By the way, we have 11 minutes until the market opens on overnight markets. Webull actually is officially updated for me. So I don't have to like just be on my phone looking at the prices on Webull. I can show the prices and they'll update overnight. Now, one quick thing before I get into Tesla, because I do want to talk about Tesla as our first segment. Bitcoin spiked right before I went live. So we were at 93,762 like an hour ago, and now we're at 95,710, almost got to 96,000. So this is definitely going to affect some of the equities and proxies that we look at, a Coinbase, a Robinhood, MicroStrategy, et cetera, as we get into the 8 p.m. open. But it is nice to see Bitcoin getting a little bit of Sunday love. And hopefully this gets us into the Trump inauguration, which is happening in 11 days, which is very soon, or not 11 days, like 8 days. Yeah, it's happening pretty soon. It's happening in next Monday. And so whatever he does on that first day might have some implications on Bitcoin as well. And so it's nice to at least hold the mid 90s, which is where we're at right now. All right, let's talk about Tesla. Because I think this is definitely got to be the first segment, and then we'll get into all the macro stuff. So you guys know over the weekend, I had to go to Jersey City because I'm thinking of moving to Jersey City. So I went to view the apartments. Apartments were incredible. I fell in love with, I think, the 5th one that I saw, and I really want it. Probably not going to get that exact one because that one's going to fill out in terms of its application very soon. And so I'm hoping I get something like that in the summer, but I love the place and I'm completely sold on the community. Dude, it's a great place. It's a great place. I just know, like sometimes like there's a couple of apartments I walked into and I was like, I can't live here. The one I walked into that I knew is the one I want to get. So we'll see what ends up happening there. But I chose to drive there on FSD. And look, maybe this sounds a little hyperbolic. I tried to express it the best I could on Twitter last night. Literally, I got home, parked the Tesla, and I sat in my Tesla for 10 minutes and I wrote this out. I'm not going to read the whole thing, but if you want to read it, you can go on my Twitter. Mr. Elon Musk was nice enough to retweet it, so that was nice as well. But essentially, my argument was that this is the first V13 FSD I've ever had in my life in terms of like a real drive, not just a drive to the local Best Buy, but a drive across the turnpike, highways, navigating complex infrastructure. Could the Tesla get the job done? I had zero interventions. Zero. When I mean zero, I mean I did not touch the wheel once. I didn't have to touch the pedal. I didn't have to touch the brake. I had to do nothing. We're talking about complex highways in New Jersey. Like the turnpike is not the easiest thing to drive on. You got a lot of lane switching. You got a lot of cars, got a lot of different speed limits every time you go to a different section. This was one of those things where I was pretty skeptical getting into the car. I was like, all right, let's see if it can handle the turnpike because I really didn't believe it could. And I'm there just sitting in the car and I'm looking around and I'm like, I haven't intervened, I haven't stopped, I haven't done anything. And the next thing you know, I'm at the apartment complex. It takes me through Jersey City, which is much more crowded. It's not New York crowded, but it is still crowded. And so we get through the highways, we get into the apartment complex. There's a lot of people walking around. It's stopping. There's speed bumps, all this stuff. And we get there safe and sound. And I'm just like, holy crap, what is happening here? Like how did that just happen? And so I wrote up this post, and the idea of the post was just like, I'm a believer, and I'm a believer because I just experienced the future. This is it. And what do I mean by the future? I want to be a little bit nuanced here because obviously you can't stay at your phone and like actually like get work done or anything and like have your laptop open because immediately the car will be like, yo, pay attention, right? We're not at unsupervised FSD yet. What I noticed for 40 minutes, longest FSD drive I've had in my life with 0 interventions, I was able to think. I was free to think. I was able to let my mind expand the horizons. I mean, at some point, you guys I'm sure plenty of people have had this experience where you're driving in a car and you're already thinking about something else. And so you're in the motions of driving, but you don't even know that you're driving, especially if you're going to a place you like your local grocery store, right? You already know what turns to take, all that stuff. So you start thinking and you're doing the turns and then you don't even realize that you're driving. And there's been moments in my life where you just get hit in the face and you're like, wait a second, I'm driving. Like, I can't just be over here daydreaming about whatever I'm driving. And it's kind of scary, like to be serious, it's kind of scary because in those moments, you're like, what if I didn't snap back to reality? And then, oh, there went gravity, and at that moment, there might be a little bit of a crash. And at that point, it might not be the best. So, and you might end up losing yourself in the process. All right, I got to stop. But still, the point is like in those moments, it's very scary. And when it gets that scary, you then have to make a decision on like focusing on the road and getting out of your daydreams because you have to drive. Well, on this Tesla, I got to think. I got to fucking think. I got to think for 40 minutes. And at some point, obviously I was paying attention to the road, but because it felt so real, because I trusted it, because it gained my trust when it was navigating these weird highways on the turnpike in New Jersey, which I've driven for the past 10 years. And, this thing drove way better than me as a robot, which it should because it's trained on all this data. I trusted it and I was able to think. And so when we talk about margin expansion, which is what the optimal belief of AI is, my own personal margins, I believe, can expand with FSD. So $8,000, look, is it a ton of money? No. Is it worth it for me at this point? No, because I don't drive that much. But I can't imagine getting into this car and not having FSD available. Even if I'm only using it for a little bit, just being able to trigger FSD and let it drive itself for a bit so I can think about whatever I'm thinking about. It's really important. And I think, as a content creator in particular, being able to just think and map out my ideas, all that stuff, that's very important for me. And that increases my own productivity. It got to the point where my mom didn't know I went to Jersey City on FSD. She knew I was going to see the apartments. And I FaceTimed her when I was in the apartment I loved. And she was like, you got to get it. And I was like, oh man, I got to get this. But I came back, I wrote I wrote the post, Elon retweeted it. And I told her Elon retweeted it. And she was like, what'd you say? And she sees the post and she loses her mind. She's like, the car drove you. I think my mom's getting very superstitious. She's seeing a lot of stories in the news about people dying in car crashes. So every day she's like reminding me to be safe. Like she's getting to that point. And I'm just like, yeah. And she got mad. She was like, you let the car drive you? Like, that's so unsafe. And I was like, Mom, tomorrow morning, let's go take an FSD drive. My mom, we take an FSD drive this morning for about 20 minutes. My mom, I'm telling you, she's like dead scared. She didn't want, like, I had to really bully her into getting in the car with me and doing FSD. She's not a believer in this thing at all. Within 5 minutes, she's having the time of her life. She's taking videos to post on Facebook and shit. She's like, oh my God, the car's driving itself. It gets to the point where and this is a real story. We get home. My dad, you guys know my dad got into a pretty bad car crash and thank God his life was safe, but the car, our Honda CRV, completely totaled. He bought it like a couple months ago. So just went down the drain when I was in India. And one of the reasons my dad got into a car crash, it wasn't his fault, but he's getting older. And we know, given I've driven with him enough times, his mind ends up wandering, right? Like he's 63. Like my dad's, is kind of OCD like me. He starts thinking about a lot of stuff. So we could tell he wasn't paying the most attention during that crash. My mom has been against my dad getting a Tesla for the past 5 months because she knows it's a new car. There's a lot of technology and you have to pay attention like when you're dealing with that, right? There's no manual thing where you can just move it from P, R, N, D, L. You have to be able to like know what you're working with when it comes to Tesla. There's this big touchscreen. My dad's getting older. She's not safe with that. We get home. My dad's sitting down. She goes to my dad. She's like, you're buying a Tesla. I shit you not, dude. And she didn't say that in the car. So when we sat down, I was like, what? I was like, you want dad to get a Tesla? She's like, this thing will just drive him. It's perfect. So now he can, like, if he's, if his mind is wandering, he'll be safe. 15 minutes of a drive, dude. That's how much it took for her to be convinced. And I'm telling you, for the past 5 months, because my dad actually wants a Tesla, but my mom's been pushing back because she's like, no, you can't get a Tesla. Like, that's too advanced. And now she's like, oh no, this is perfect. Because like now he can just sit in the car and like, it's safer than him driving because again, when you're driving, you're human, you can make mistakes. The fucking robot on its 13th version is going to make some mistakes, but not as many as a human. And it's a hard pill for me to swallow as well, because 2 years ago, I was like, there's no way FSD is a thing. I was like, who the hell would get into a car where you could drive yourself? And now I'm over here like, I can't imagine not having this happen. So again, FSD is not perfect. There's obviously going to be mistakes. It's going to get better. But the point is, I got to skip the crappy versions that I know a lot of you guys had to deal with over the past decade, especially some of the OG people using FSD. And I got to go straight to 12.5.6 and then 13. And I don't have enough words for how amazing it is. Like that post I wrote up when I came back from Jersey City, it was very genuine. I wrote it up and I was just like, this is the future. And as an investor, although I feel there's a lot of volatility that's going on with Tesla, it also makes me think I don't understand how Tesla doesn't win this game. I really don't. There's a lot of AI shit we're talking about. When it comes to real world AI, it's bots and self-driving. And maybe there's going to be something else that comes up in the future, but it's bots and self-driving. Tesla bots probably on the way. We'll see how ambitious Elon can be with that, but self-driving is here. And it makes me laugh about all the conversations Gary Black and all these people have been having about advertising. It's like, what I experienced was the advertising. The only advertising should be to get people to experience what I experienced. They don't need to do Facebook ads. They just need to get butts in seats experiencing FSD, and anyone could be sold. Because if my mom could be sold, who's the most skeptical person around this type of technology, and she wants my dad to now buy a Tesla because he does need a new car because the old car crashed. It was pretty incredible. It was pretty damn incredible. So that's the experience I had with Tesla over the weekend. It makes me want to just buy as much Tesla stock as I can. Obviously, I'm trying to be a little patient here because I know this market is going through a lot of volatility, and I think we can get some decent discounts across the entire market. I do have puts on Tesla, and so if I get a sign on those puts, dude, I'm like, all right, give me those shares because this is the future. I'm experiencing the future, and I think this future is probably going to get bigger and bigger and more important when it comes to Tesla. All right, 8 p.m. overnight markets are open. On Webull, you should be able to see overnight. They're loading up just now. It doesn't load. So on Apple, the 236 is Friday's price. And then underneath it, if you guys can see overnight, it says 237. So I'll just read them out for those that can't see it. But Apple, we got up about 30 bips right now. Reddit is up a little bit. AMD is flat. NVIDIA, which by the way is trading at its lowest price to earnings since it was at $90. We'll talk about that in a little bit as well. Is up a little bit, up 0.28%. SMCI is up 0.45%. Steve's secret stock, for those that were wondering, on Friday, he came on the market open and said he has this new stock that he's buying. If you didn't get a chance to watch the market close, it was SMCI. So SMCI is the one that he is getting excited about. I don't really agree with it. I'm probably not going to buy it, but I do think that, if NVIDIA does really well, SMCI should do well. I just don't feel like trusting SMCI. I feel like there's other places and other companies I can trust, but nonetheless, that is the stock that he's getting into. Robinhood overnight is down 0.1%. SoFi is up 0.35%. S&P 500 down 0.1%. We're going to talk some technicals on S&P 500 from Fundstrat. They had a report that came out today. 570 is the level S&P needs to hold, or else we're going way lower. So 570 should be on your mind in terms of hopefully that being support for the S&P. Snapchat's up 1.36%. It does look like TikTok is going to get banned, so that makes sense. Meta is up 0.06%. It was up 1% on Friday. We did also have some pretty crazy thing that happened on Friday when it comes to Zucks. He went on Joe Rogan. We'll talk about that in a little bit. Walgreens is down 0.51%. Google is flat 0.02%. United Airlines not trading overnight. Home Depot's up a little bit. Lowe's is up 1%. Walmart's down 0.05%. Target's down 0.5%. Nubank's up 2.28% overnight, which is not bad. Nike's up 0.22%. MicroStrategy's up 1.77%. Where is Tesla? Tesla's up 0.07%. So Tesla basically flat. And then Palantir continues to get hit, down 0.5% on Tesla. Or not Tesla, on Palantir. So Palantir right there, 66.85. We'll talk more about Palantir in a bit as well. But realistically, I mean, we need to wait till earnings for any serious progress on Palantir. They've also not done any press releases. I haven't seen any kind of crazy deals. I am going to be talking to a company this week that I think will have some implications with on Palantir as well. So that'll be later in the week. But outside of that, no actual news from the company that we've gotten over the first 10 days. Spirit Airlines is not public, Spencer. So they... and you know that, but Spirit Airlines is gone. The dollar, yes, let's check futures on the dollar and see how the dollar is doing. And then we'll get into all the macro stuff that I want to talk about going into this week. Dollar futures are up a little bit, 0.05%. Actual futures are basically flat. Bitcoin, are we still at 95 on Bitcoin? We're still at 95, holding 95,212. But everything else is still down. Tesla weekly coming soon. No, look, I think I talk about Tesla enough on the show, and we do a segment on it pretty much every day because there's a lot of news about Tesla, right? And people care about Tesla. I'm learning more about Tesla. So yeah, we're not going to start a Tesla weekly or anything like that. But what I am thinking of starting is, and I'm dead serious about this, a FSD Tesla YouTube channel where I hook up the camera in the car and then I just drive throughout the tri-state area. To do this type of channel, you just need to be able to talk for 40 minutes. I think I could talk for like 40 minutes, maybe, And so I would just like talk about a random stock or the economy or something. And then you guys could get to see FSD V13. Yeah, futures are basically flat. They're down a little bit, but nothing too crazy. You guys would get to see FSD in California and in New York and New Jersey. There's a lot of FSD YouTubers in California and San Francisco. There's not a lot of New York and New Jersey. So I think it would be nice for people who are interested to see some of that stuff. And I would enjoy it. I actually would enjoy driving around in FSD and just talking, and it would give me an excuse to drive more in FSD and get a lot more experience with driving the car with FSD. Also, I have a Tesla. I mean, if I have a Tesla, I might as well use it, right? I can't write off the FSD premium. It's not for tax reasons. I already asked my accountant. I was like, well, what if I do that? He's like, no, dude, you already got $7,500 off. You can't take off more. So it also, what would that YouTube channel make in terms of revenue? Maybe if it's like really decent, $1,000 a month, maybe, right? Scaling a YouTube channel is not easy, right? So, and there's so many other Tesla YouTubers. It's one of those side projects I want to do. And whatever money it makes, if it makes a couple $100 a month, I'll just put it into Tesla stock. Like literally whatever money the channel makes, I'll just buy Tesla with it. I want to do it because I have a Tesla. I might as well do it. It would give me an excuse to travel a little bit more, drive around, go on more road trips. And then in general, I just think it would be really cool to get more data on FSD. So that is the reason for why I'm thinking of doing it. But the real reason I'm thinking of doing it is because I was just inspired, dude. I was so inspired by V13. I got to take this screenshot of the New York City skyline while I was driving. I had to sneak the screenshot because Tesla gets mad at you if you take out your phone and you're not paying attention. But it was a really quick screenshot, and it was just amazing because there is the skyline as I'm driving, but I'm not really driving. Tesla's driving. Yeah, we got to name the channel Miracle Whips. Talking about stocks and Miracle Whips, stocks and Tesla. We got to think of a cool name for it. But I would just be talking about, anything, probably stocks and the economy, maybe some life stuff. But I think it would be cool. And it's dynamic because people are watching this robot navigate the complex highways of New York and New Jersey, the streets of New York and the highways of New Jersey. And I think it would be cool. So that is the idea. Nonetheless, that's what we got in the context of Tesla. If you're just joining, was really inspired over the weekend, got a big FSD drive, probably going to be, much more in tune with the FSD thesis as I'm experiencing it more every single day. And where does the stock go? I have no idea. I think the stock is not really contingent anymore on anything Tesla does. There's a lot of macroeconomic factors that we're about to talk about that I think have much more implications on an equity like Tesla. But it is the future. It is very obviously the future. And this is coming from someone who, if you guys watch the OG Finance Junkie podcast, I used to have debates with Carlos. I'd be like, this is stupid, bro. Who would get in a car and like, you would trust your parents? I'm like, I would trust my mom in an FSD coming from the airport today more than an Uber driver. Like, because it's a computer that's trained on billions of miles of data. Like, it's going to be better than a driver. There's no way in hell it's not going to be better than a regular person. So, like, when I go to a stop sign, it actually stops. When I go to a stop sign, I guess you could say I stop, but I kind of like stop and go. This shit stops. That's safer than any stop I've ever had at a stop sign in my life. I'll just say that. And so I think it's gonna be good. I think it's gonna get better and be good and be really good over the next 10 years. And that's the other thing about Tesla, to wrap this up. It's only gonna get better. And that's the thing I'm realizing just as an investor. I'm like, wait, this is only going to get better. The data advantage they have is proprietary. All this NVIDIA, we're going to create these, synthetic data models. I'm like, what is this shit? Now I'm thinking of Cosmos, and I'm like, I feel like that's just trying to compete with Tesla. And maybe Toyota and Honda get some synthetic real world data that NVIDIA comes up with that makes them more efficient. But all of that data to me is commoditizable outside of what proprietary data is available, which is actual drivers driving the car via Tesla FSD and then sending that data right back to Tesla. So it's just getting me more excited, getting me a lot more excited about Tesla. All right, cool. Let's get into macro. We got a lot of macro to discuss. FSD, finance and stocks while driving. This is actually not bad, Lunar. This is not bad. I'm really seriously thinking of doing the channel. I looked into the equipment today. It would cost there's actually a decent amount of equipment that you need. It would cost me round about $1,500. So it's like I would be losing money because a YouTube channel is not going to make $1,500 that easily. But I still would like to do it. I think it would be cool to end up doing it. All right, cool. Let's get into macro. Let's get into macro. We got a lot of macro to discuss. So wait, real quick, last thing on Tesla, because this is actually related to the stock. So this came out today. Europe's largest pension fund said they sold their entire $585 million stake in Tesla in Q3, partly due to Elon Musk's compensation package. The fund voted against it and thought it was exceptionally high. If they had held the amount of shares that they sold for $585 million, today it would be worth $1.1 billion. So it goes to show, it just wasn't a smart move betting against Elon just because of the compensation stuff. It was really a lot of smoke and mirrors. Because at the end of the day, the street has come to the conclusion that FSD is a real deal. And if the street's coming to that conclusion, upgrades are going to be imminent, and upgrades have been imminent that we've seen. Here's another upgrade from Deutsche Bank that we got on Friday, 370 to 420. It's not as high as the 480s or 500s, but still, the fact that they're moving it up into the 400s and trying to normalize that $400 range does mean that the street's getting a lot more excited about Tesla. Okay, cool. So macro, let's talk macro. We got a lot of stuff to talk about macro. So here's the first thing I want to discuss. CPI, right? This week's going to be very important. What happened last week? Well, we got jobs data, non-farm payrolls. They were much higher than expected, 256,000 versus 165,000. So we added 100,000 more jobs. Market didn't like that. The 10-year spiked to almost 4.8%. The dollar went up to 109, and basically equities sold off, and then they kind of recovered during the day, and then they kind of sold off. It was red, definitely on Friday, but it wasn't like bloody red, but it was 1.5% down on the S&P 500. Now, why was that the case? Well, if we have too many jobs, we have too many people spending money, we have too much inflation, we go back to this 2024 macroeconomic era that we were in, which is great news, amazing jobs reports, but bad news because those jobs reports mean inflation is sticky and it's going to be very hard to get to 2%. On the flip side of that, the reason it was a catch-22 on Friday is because if you don't believe the jobs report and the jobs are fake and we don't have 8 million jobs in America and we didn't add 256,000 jobs in the month of December, well, people actually are unemployed, which is not good because they don't have money. And if they don't have money, then, goods and services are not going to be bought, and that's not good for company earnings. The one reason I am a bit hesitant about saying it's all fake, because I know everyone's going down the it's fake narrative, which is fine. Delta's earnings were amazing. And Delta is a consumer product, right? People need to get on planes. They need to have disposable income to get on a flight and travel. And the only reason people are really getting on planes outside of working for business is if you're traveling, which means you're taking a vacation, which means you're going on to tourism, which means you have money. So I think Delta's earnings are kind of a little bit of a dog whistle to the idea that, wait a second, how easy is it for us to say that the job numbers are fake? It's probably not as accurate as we're thinking. But then I'm looking at earnings, which is like, where's the money coming from? Money comes from somewhere, and it has to probably be coming from jobs, especially if wages have stayed flat, which means we just have to have more jobs. So yes, we're going to have to see what the banks report this week. JP Morgan, Citibank, all of them. By the way, Jamie Dimon had some thoughts over the weekend as well. He did an interview. We'll talk about that. But if all the banks also say deposits are up, they have more loan originations, they are getting ready for M&A and IPOs, it means that the traditional elements of why we were bullish right after Trump got elected are still intact. And there hasn't been anything super shaky to the macro to get rid of those kind of core growth elements. And if that's the case, hopefully, Q1 in 2025 is not going to be that bad. Now, let's get into what Tom Lee thinks. So here's the report that he put out tonight. Lee doesn't believe inflation is accelerating, pointing to wage growth holding steady at 3.9% from a year ago. He also highlighted what Chicago Fed President Austin Goolsbee noted on Friday. By the way, if you were on the market open on Friday, Goolsbee was pretty confrontational with CNBC because they kept trying to insinuate that he's not restrictive enough with Fed policy. And he's just like, no, monetary policy is incredibly restrictive. And you guys are looking at the wrong metrics. He was highlighting core PCE, which is under 2% versus CPI. Tom Lee says this is not a level associated with wage-driven inflationary pressures, meaning it's not people making more money at their jobs, which is creating the inflation. It's from other stuff. There was also some concern about the University of Michigan survey of a one-year forward inflation expectation rising unexpectedly to 3.3% from 2.8%. Tom Lee points out the likely role of political partisanship. So Lee's kind of blaming politics here. The inflation expectations of those identifying as Democrats surged while those of Republicans fell, with supporters on both sides flipping their views between October and January. To me, he writes, this means the University of Michigan inflation survey looks very political because the only change between October and now is the Republicans taking the White House and Congress, aka Harris also losing, and the Democrats losing, which is why the Republicans had a clean sweep. So basically, the University of Michigan survey, keyword is a survey, and expectations for inflation are up 50 basis points. And Tom Lee's argument is like, well, it seems like based on what we're seeing in the data, the Democrats say inflation is going to go up, probably because the Democrats don't like Trump and they think tariffs are inflationary. That's also the mainstream kind of narrative around Trump's economic policy. And the Republicans are happy Trump won, and they're saying, no, inflation is going to go down because they think Trump's going to lower grocery prices, which is what Trump's been saying for the past couple months. We don't know who's going to be right or wrong yet, but the argument that the market's reacting to this University of Michigan survey, Tom Lee's argument is probably because it's politically motivated more than anything else. Together, these sent the VIX briefly above 20 on Friday, a sign of panic and a sign we are nearing a bottom. Very interesting. So Tom Lee's calling a bottom based on the VIX getting to the levels that it got to on Friday. CNN fear and greed currently right now, we are at almost extreme fear, which again, look, this is not the best measure of the economy, but you don't have to be a macroeconomist to just know, okay, I buy an extreme fear and I sell at greed or extreme greed. And so I think 570 on the S&P, we get there, which is maybe another couple percentage points down. Some individual names might go down 7 to 8%, maybe 10%. That could get us to the point where Tom Lee's right and it would be a bottom. That's consistent with Newton's technical analysis from Fundstrat as well. Newton noted that the S&P 500 is still technically within its bearish short-term consolidation pattern, aka it's probably going to go down further from a technical perspective. On Wednesday, he also warned that the S&P 500 looks likely to undercut 5829 post Friday's jobs report, and it did that, closing the week at 5827. Looking further, he suggests that based on this work, technical support lies near 5700. He writes, I suspect the S&P 500 might attempt a bottom by early next week, which would definitely get us into extreme fear, which also tends to be a bottom in stocks historically, and begin to bounce into mid to late January. So this is what Mr. Tom Lee thinks. He thinks, hey, this is a dip you buy. We're getting close to a bottom. And if we're getting close to a bottom, that's not going to be too bad. Now, what does Goldman Sachs think about CPI? So first of all, they expect on Thursday a very strong December retail sales report, which actually we get on. Yeah, we get that on Thursday, and we get initial jobless claims. So Goldman Sachs is saying, hey, we think December is going to be amazing, which is no surprise because Q4 was holidays, so it should be amazing. And they're expecting just 205,000 initial jobless claims, which would be one of the lowest numbers we've gotten over the past 5 weeks. Now on CPI, they're expecting headline CPI to be up 50 basis points month over month, or 40 basis points, and up 2.9% year over year. Core CPI would be up 0.25 month over month and 3.27% year over year. Basically, in December, we had 2.8 on CPI headline. Goldman thinks we're getting to 2.9. This is actually bullish to me. Is it bullish that inflation's going up? No. But if Goldman and JP Morgan and Wells Fargo and all of these guys are like, all right, we think it's probably going to go up to 2.9, the beautiful thing is then it gets priced in. And no one should be surprised if we get 2.9. By the way, I don't think anyone's going to be surprised because not only has oil been going up, but we've seen a bunch of things that have been inflationary across the entire landscape. Natural gas is another example with all the struggles that are going on with energy right now, especially in Europe. So yeah, we probably have some more inflation. I mean, we're seeing it in a lot of different numbers. We have more jobs. So the good thing about this is like, and this is the beautiful thing about perception being reality, is that if we're already perceived in the stock market to have higher inflation, it is going to be no surprise if we get 2.9. Now, if we get something like 3.2 or even a 3 handle, which is not going to be fun if we get a 3 handle just psychologically, although I do think it'll be kind of like a flash crash if that happens. But if we get something above 3%, yeah, it's going to be bad. Like, we're going to see equities sell off. It's just that simple. If we get below 2.9, I mean, we don't have to see equities go up, but we definitely could see a little bit of consolidation from an inflation perspective and from an inflation perception. And that's really important as well. So I think that CPI number matters this week. Look, I said last week it was going to be one of the most important CPIs. I kind of changed my mind on that. I don't think that's the case because we know that it's going to be a little higher. So this is not one of those CPIs that's right before a rate cut or right before an FOMC meeting. I mean, it's right before an FOMC meeting. But then again, the other reason it's losing its importance to me is because if we look at the Fed probabilities on a January cut, it's at 97% that we're going to pause. So if the CPI is really low, like, we're still probably going to pause because J-Powell's not going to disrupt market expectations like this unless it comes in at like 2.3, 2.4, which is not happening. And if we're really high, okay, then we're not going to cut. Now, the real surprise thing here would be if we hike. And like that would not be fun. But I don't think this inflation is going to be strong enough to hike, at least in my opinion, especially with shelter coming down. And so I think CPI is kind of going to be a nothing burger this week. There'll be some volatility, there'll be some reaction, but it's not going to be that anxiety-driven CPI. Because in general, most people are waiting for a dip. And if they get a dip because of CPI, I think people are going to get excited. They're going to, like, if Robinhood goes back to 34, I'm buying that dip. And if CPI is what gets Robinhood back to 34 before they show that they did almost $1 billion in revenue on February 12th, yeah, I'll take that dip. I won't be too upset about buying that. The 10-year right now, let's take a look at how that's performing against futures. The 10-year is slightly down 4.76. So 10 years not moving up too much higher. S&P 500 futures are down about 20 bips. Same thing with the NASDAQ, and the Dow Jones is flat. VIX is up 1.42%. If we get back above 20 on the VIX, Tom Lee thinks that's a bottom. Maybe we get to 25, 27, whatever it is, but that would probably get us to S&P 500 570, and that's where he thinks we should be bottoming up. So that's what we got in the context of the macro. Is CPI this Wednesday? CPI, it's weird. Usually PPI comes after CPI, but this week PPI is coming before it. Yes, it's Wednesday and PPI is on Tuesday, which is weird. I wonder if that's accurate because usually it's after, but I guess this time it's before. So yeah, it's going to be it's going to be on Wednesday, and we should get a sense of it with PPI on Tuesday. Now, oil is not doing that well. Oil futures are up about 2%. Oil is the highest it's been in 5 months, folks, at 78, which also is another reason why I don't think it's like super exciting to deploy cash in this market, because look, if oil is going up, we know energy inflation is going to happen for January and February unless we get a dramatic decrease in energy prices, which it doesn't look like it's going to happen based on everything going up in Europe, unless Trump, drills as soon as he gets into office. So it's one of those things where it's like if either the market normalizes the increase in energy and then the increase in expectations for inflation, or the market freaks the hell out if we're at 3.5, 4% inflation, which I do think the market would freak the hell out, and the 10-year would probably get over 5%, given how much progress we made for it to come back. It's like if you're losing weight and you made so much progress, and then you go a couple weeks without working out, you start eating bad again. It's like you feel like shit, and so the market's going to feel like shit. I think those would be incredible opportunities because earnings, as long as people have jobs, earnings are not going to go away. Earnings growth is still going to be strong, and we would get phenomenal discounts at that point. Definitely, probably 10 to 15% across the board. But it's just a question of if you're patient enough to see that play out, or if that actually does play out. And I think over the next few weeks, especially after Trump gets in, then we're going to have a better understanding of it. Lunar says energy is the place to be in 2025. I can't disagree with you. Energy stocks and energy infrastructure in particular has outperformed everything across the entire market, including big tech, small caps, crypto, etc. So energy so far has done very well. Some updates on overnight trading. Bitcoin back below 95. Robinhood somehow holding $40. I don't know how this thing is holding 40, but it's been very resilient. Tesla's at 392. Palantir's at 66. China's actually up right now. So you got China up a little bit. S&P is 579, so we're below 580. NVIDIA 135. And outside of that, nothing too crazy. PayPal's down a little bit. SoFi's at 1417. Yeah, there's nothing too crazy. I mean, everything's either flat or slightly down, and you got some things that are green, but they're not super, super green. So nothing too crazy. Artist here says, if the rates are down, that means there's been an increase in demand for the bonds, driving down the interest rate, supposedly bearish for stocks. I just don't think we understand this stuff. Well, no, you're right. This is why macroeconomics is so nuanced. This is why Peter Lynch probably said, caring about this stuff doesn't matter. Although I do think caring about this stuff gives you a little bit better insight in terms of how you time your investments or just like entry and exit points. But you're right. If we get massive bond demand and bond yields come down, that means the market either A, is getting excited that inflation expectations are coming down, so they're trying to lock in a yield and they start buying bonds, or they think the economy is breaking, which is the bearish part you're talking about, Artish here, and people are losing jobs, aka the Fed's going to cut. If the Fed's going to cut, let's lock in its 4.7% yield because it's going to go down to like 2.7% in the next couple months or next couple years, whatever. And then the economy breaks and potentially we have a recession. That is the scenario, what I just said for the past 30 seconds. That scenario is what all the bears thought was going to happen in 2023 and in 2024. And it didn't happen. And to the bears' credit, they thought it would happen because 2022 was so disastrous and rates were still so high and we didn't cut until September 2024. So for 18 months, we kept hiking. So the bears were like, okay, so we're going to induce a recession. Inflation is going to come down via a recession. Equities will crash because of a recession. And then boom, you get your little cataclysmic, epic economic market meltdown. Even Michael Burry, January 2023, he had one word on his tweet that he has now deleted and his entire Twitter account is deleted. What was that one word? Sell, with a period. That's it. And obviously selling January 2023 was the worst decision you could make over the past 2 years. The actual worst decision was October 2022. That was the worst time to sell. But that is the nuance here. And again, J-Pow has done a fantastic job not having that scenario where bond yields go down because the economy is actually crashing, aka equity prices then reflect lack of earnings growth, so they crash. He has stopped that from happening. But the nuance here is that we still haven't gotten rid of the $8 trillion that we printed. And so this is why, to the bears' credit, their argument is like, guys, there's a lot of money in the system. This has to get flushed out somehow. And the reason a lot of people have been stuck in cash is because either A, they don't believe in tech or the AI revolution, or they believe eventually this $8 trillion is going to result in some type of overspending, massive inflation. Inflation is going to be sticky. Therefore, we have to have some type of economic recession because Jay Powell and the Fed wants inflation to come down. But if that doesn't happen, somehow, I don't know how the somehow is going to happen. I don't even think Jay Powell knows how the hell that's going to happen. But somehow, if that doesn't happen, which so far it hasn't happened because of tech, it's been deflationary. China is going to be deflationary. There's a lot of nuances there, but somehow we've avoided that. And if we keep avoiding that, this market's going higher, and people are not going to sit on the sidelines because of this economic recession that might come or might not come. But the bears have an argument for why it should come. It's just they've been wrong and it hasn't come, and JPow's been able to figure it out. Tesla right here at 392, Bitcoin back above 95,000 at 95.1. I think if you made money over the past 2 years in the market, the smart thing to do is give a little bit of credence to the bear case and say, okay, that could happen. So I'm just not going to be super risky. I got to be super risky over the past 2 years. A lot of you guys got to be super risky over the past 2 years. Maybe it's not the time to YOLO MSTR options. The time to do that when it was at $40. Maybe now it's at $350. That's not the time to do it. Or maybe Bitcoin goes to 250,000 and MSTR goes to $1,000 a share, right? The risk you're taking for that to happen versus the risk you were taking when Bitcoin was 20,000 and MicroStrategy was $30 is totally different. And I think everyone needs to be accepting of that risk going into 2025. The LA fires are definitely inflationary, one of the most costly natural disasters in all time. Yeah, that's another argument for the bears. I mean, $162 billion is what I've seen. Or sorry, not 162. I saw 50 billion. Let me pull this up right here. I saw 162 from a couple sources, but you have other sources saying 50. I think it's going to be well over 100 billion. But so far, estimated damages of the LA wildfires are 0.55% of the US GDP. That's insane. Estimated damages are $50 billion away from passing Hurricane Katrina. And then 69% of State Farm homeowners insurance policies in Pacific Palisades were not renewed prior to the fires. That was wild. You guys heard 150, right? Okay, so I'm not tripping. 150. So 150 billion is what I'm hearing as well, which is 50 billion away from passing Hurricane Katrina. So people in the Pacific Palisades, people that are very wealthy, 70% of them, if they had State Farm, they did not renew their homeowners insurance policies, which means they're not eligible theoretically to get the insurance premiums to be able to make up for the fact that $30 to $40 million house of property that they owned went away because of the fire. So, I mean, just absolutely insane. Definitely not good for the stock market. Definitely not good for the economy. Obviously, incredibly bearish for the ability for us to say that inflation is coming down. And then on top of that, the question is going to be, we already have a housing market that's in really a lot of issues. I mean, the mortgage rates are almost above 7%. And if CPI is bad and the 10-year goes up, we're going to have mortgage rates at 8%. Who the hell is buying a house? Who the hell is selling a house? Now, I know there's a lot of high net worth people in the Pacific Palisades area, but that's still a lot of supply and reconstruction that has to be added to the market that just got taken off. So what if those rich people say, you know what? All right, I'm going to go somewhere that's not as rich as the Pacific Palisades. I'm going to move to Miami. I'm going to pay some people to build me a new house. It's probably going to take 2 years. I'm going to go to Miami. Now Miami real estate gets a little bit more expensive because you got a billionaire that just went to Miami or goes to New York or goes to LA or goes to Texas. I mean, like, the implications of this, I think, are wide, and we don't have an idea what it's going to be like. And the question is going to be, how this ends up playing out. Laura says a moratorium was set on cancellation of policies. If you read on X, so people still had coverage because the state of emergency was declared in a fire zone. Look, I hope that's true. I haven't got that deep into the actual insurance policies of these people. And I would hope that's true because insurance would, if you're not, this is why you pay for insurance, right? You pay for a bad situation like this, and hopefully they're covered to some extent. And then on top of that, there's a lot of political stuff going on with this, right? I mean, there's so much stuff over the weekend about the politics involved with this. Some people are saying it's climate change. Some people are saying it's not climate change. It's Gavin Newsom's policies. One thing I can say right here is that Newsom issued an executive order. This was, I think, last night. Actually, no, this was this morning. So he said, goodbye red tape. Through an executive order, we are making it easier for victims of the so-called fires to quickly rebuild their homes and lives. We're also extending key price gouging protections to help make rebuilding more affordable. So you got a lot of people that are not fans of Newsom saying, wait a second, why was there so much red tape to begin with? And, you got that angle. Then you also have the water angle, which is that for environmental reasons and certain fish that needed to be protected. LA in particular did not import the amount of water they needed from the north. And as a result, the reservoirs weren't completely filled. Again, I might not be completely accurate on that. There's a lot of information going around trying to get all the details. In the next few weeks and definitely a few months, we're going to have a lot more coverage on this. I would not be surprised if there's multiple documentaries trying to figure out how the hell this was able to happen. If it truly was a natural disaster where no one could have controlled it, or if there could have been some way to stop this. But nonetheless, it's going to be inflationary. And if it's going to be inflationary, that is not going to be a good thing for the broader economy. So that's what we got with CPI expectations. One thing on the fires before we move on is Elon. Actually, love him or hate him, I thought this was a really, really stand-up thing to do. He says, apologies to those expecting Cybertruck deliveries in California over the next few days. We need to use those trucks as mobile base stations to provide power to Starlink internet terminals in areas of LA without connectivity. A new truck will be delivered by the end of next week. Again, love him or hate him. When you see something like that, you remember, forget the political Elon that you might not like, the entrepreneur Elon that is able to get shit done, aka Starlink, Cybertruck, even make these things exist. He's able to actually change the world, especially when the world needs him the most. And in this situation, Los Angeles desperately needs connectivity. And Cybertrucks are now operating as mobile base stations to provide the power for Starlink to provide that connectivity. So that is a really good thing that's happening. But again, it's an overall sad reason for why this is happening in the first place. Cool. Okay. So that's what we got in the context of the fires. Two more things I wanted to show on macro, and then we'll get to a couple other headlines. Here's this chart I saw over the week. I thought this was an incredible chart. All of us already know the implications of this chart, but nonetheless, I think we talk about it so much in passing that it's important to look at it visually. You constantly hear me say Bitcoin needs liquidity, or tech stocks need liquidity, or you might hear an analyst say you need rate cuts to create liquidity. Why? Again, simple chart, but it's just important to look at it. Global liquidity paired with the S&P 500, almost identical. When you turn off the money printer, the S&P 500, aka the market, takes a dip. When you increase the money printer, aka global liquidity, markets go up. It's almost one of those things where we're in this crazy game where it's like monopoly money. And if you can issue more monopoly money, like the game continues on. But as soon as that monopoly money starts to dry up, the game's over. And even if companies are performing really well. So the quote here is that Stanley Druckenmiller once said, it's liquidity that moves the markets. And this chart is a sort of manifestation of that. The reason I'm bringing it up is because I think it's really important for people to understand, if we don't get rate cuts, we don't increase liquidity. And for all the people that are out there that actually think Bitcoin is going to be a safe haven if there's less liquidity because we're printing too much money, therefore it's going to be a hedge against inflation, I think they're so dead wrong on this. And it's not my subjective belief. If you look at Bitcoin's chart compared to global liquidity, it's just objectively true. If liquidity dries up, people are not saving their money or storing their money with whatever store of value you can conceptualize Bitcoin to be in Bitcoin. They're getting the hell out of Bitcoin. They're going to the United States debt because that's more dependable than Bitcoin. And so I come across these Bitcoin maxis on Twitter sometimes that are just like super bullish on this idea of hyperinflation creates Bitcoin as a hedge. And I think long term, there might be something to that thesis, but we need a lot of money for Bitcoin to get more money. I mean, you look at it in the ETF inflows. If we looked at the ETF inflows last week, tech stocks fell, I think, what, 5%, 4% last week? Bitcoin performed with the NASDAQ. Bitcoin performed with the NASDAQ. Why is BlackRock selling off $500 million, or Fidelity or ARK or Bitwise, or take your pick of the Bitcoin ETF? There's a lot of red on my screen. Why? Because you see a lot of these ETFs sold off, or people who hold the ETFs, right? Because it's just, at the end of the day, it's just people. If they sold their IBIT, it's because, tech is falling, liquidity is falling. Therefore, people are more protective of their capital, and they're not keeping it in something as risky as Bitcoin. These are not algorithms. These are real people that own these ETFs. So I think if we do get a massive liquidity crunch, that could be the reason where, and Tom Lee said this a couple of weeks ago, Bitcoin could dip back to 60K before it gets up to 250K. But the reason he thinks it can get to 250K is because he thinks rates are going to be back at 3% or below. And the reason he thinks that is because he thinks inflation actually is coming down. The question is going to be if inflation is coming down. Moon Machine says Bitcoin is still up 44% past 3 months. Yeah, but liquidity has also moved over the past 3 months. Yeah, and you don't need a chart to know that liquidity has moved over the past 3 months. Why? Because we've had 100 bips of cuts in the past 3 months. We had 2 in September, 1 in October, or 1 in November. We skipped October, and then 1 more in December. 25, 25, 50, 100 bips. So when you decrease rates in the largest economy in the world by 100 bips, you open up liquidity. That helps Bitcoin. And then obviously Trump got elected, and that helps as well. But the point is, we need to keep an eye on liquidity, and I think global liquidity will increase over the coming months, but it's not going to increase as easily as it did in 2024. It's going to take some time, and we need inflation to come down. Now, here's another stat. Let's transition to some other headlines that I'm seeing right here. So that's pretty much everything I want to say on the macro. Maybe we'll talk about a couple of things here and there, but in general, this week, CPI matters, PPI matters, markets' reaction and interpretation and perception of those data points matter. The dollar matters, the 10-year matters. All of that's going to be contingent on CPI. And then ultimately, we're going to see how equities react once we get that CPI print on Wednesday. I'll be live at 8:20 a.m., so I'll be live 20 minutes earlier on Wednesday to cover CPI. NVIDIA is now trading at just 30x fiscal year 2026's estimated earnings of $4.44, which is its cheapest bottom line valuation since shares were $90 in May of 2024. I thought this was really interesting because not only last week did we get Jensen doubling down on pretty much all the reasons you should be bullish, he introduced new reasons to be bullish, which are self-driving and the sort of synthetic data that NVIDIA is creating for OEMs, but also robotics. And we'll talk more about robotics. But it seems like if you believe in that growth story for NVIDIA, it is trading as cheap as it was at $90. Now, again, the way you get there is because you go to 2026, you assume they're going to get at least 450 of EPS, and that is what makes it cheap. But if you believe that, NVIDIA potentially at these levels, maybe the market steps in. We've seen the amount of call premiums that have gone up on NVIDIA. I think it was like $50 million just on Thursday and Friday when NVIDIA went from 153 to 138. People stepped in. People bought calls. And so people are getting, and this particularly for mid-February. So people are getting really bullish for NVIDIA earnings, and they do think that they're going to show the growth and the guidance that it's needed for 2025 to get that momentum. Rango says the 10-year and 20-year bonds need to be higher, lower long-term rates for any upside to equity markets this year, in my opinion, but also Trump will be told this 100% and he cares about this. Yeah, I mean, on the Trump angle, like, I don't think Trump's letting this market crash. The market might crash and it might suck in terms of, we get a nasty dip, or rather I should say correction, 10, 15%, which is what a correction is defined as. But I think that's when Trump steps in, and I don't know what he does. I don't know if he fires J-Pow. I don't know if he mandates that rates come down, even though he can't do that. I don't know what he's going to do, but he's not going to let this damn dollar stay at 2022 levels. And the dollar's down a little bit, by the way, just came down 0.05%. And he's not going to let the 10-year stay at 4.5%. I just don't think he's going to do that. Now, granted, if he wants to institute these many tariffs, and tariffs do end up being inflationary, which I think none of us really know the implications of that yet, maybe it doesn't matter what he feels. Maybe the market's just going to react to that. I think there's so many unknowns about Trump, but the one thing that's known is that he measures his performance by the United States stock market. And if you're a stock market investor, whether you love his politics or hate his politics, you probably want your stocks to go up. And so if he cares about that and you care about that, that's one thing everyone can agree on. Tesla's falling. Let's take a look at the overnight markets where, everything's down now. So Robinhood just below 40. Tesla's at 390. Tesla's down 1%. Bitcoin's still at 95. I'm actually surprised Bitcoin's holding 95 with futures being down this much. Maybe a little bit of a pump fake. Oh, the S&P 500 is down as well. 578. So that is really weird that Bitcoin's up while everything else is down. Nvidia's at 134. Snowflake is up 1.25%. Tesla now 389. PayPal 83. ARK 57. SoFi's up 1432. Maybe that one is perceived as a bit oversold. Amazon's down 217. Apple 236. Apple got hit over the weekend, or not the weekend, but over the past week, when one of their most famous analysts came out and said through his preliminary projections, he thinks iPhone sales are going to be down year over year, or at best flat. And then Zucks ripped Apple a new one on Friday when he critiqued them. So that's creating some volatility there. Netflix back to 832. Wow. Remember Netflix was basically $1,000 back in December, or it was approaching that. Netflix coming back down to 832. That one's getting hit. Broadcom, does that trade overnight? Broadcom 222. That's down 1%. Let's see the semis. TSM reported amazing December revenue. So it looks like Q4 is going to be great for them, but TSM's down 1%. Qualcomm's down. Broadcom's down 1%. ASML's basically flat. Intel's down another 0.5%. Intel can't catch a break. SMCI, I'm going to take a picture of this right now. Send it to Steve. SMCI is the only semis name that's up, because why not? Now that Steve picked it, it's probably going to 50. AMD down 0.5%, and then NVIDIA right here down 1.1% here right now. Who's buying the dip on AMD? Who's buying AMD? Because this one, I know it's a crowd favorite. I know a lot of you guys are liking it. Look, if AMD gets low enough, who knows? Maybe I jump in as well. But 115 is lower than what it was on Christmas Eve. And maybe it continues to go down, or maybe it kind of bottoms out here as well. Brian bought some AMD. John bought some AMD. Essence of Bitcoin said I'd rather buy NVIDIA. Honestly, I would as well. Like NVIDIA at 130, I like more than AMD at 115, which maybe AMD outperforms, maybe, but just I'd sleep well at night a little bit more with NVIDIA. RF got 500 shares last week. A guy is short NVIDIA. Mickey says I want AMD in double digits. If shit hits the fan, that could happen. It's not crazy. It's not that far away, $15 away. But then again, everything would be getting hit. And that's when I think it's time to go shopping. Spencer says I'm not buying until the dip stops dipping. That is fair. Chris, 2,200 shares. Duncan has ASML. Sasha says I'm not buying AMD. Yeah, I would say sentiment around AMD is definitely more bullish than bearish. I mean, obviously the stock has been acting bearish, but sentiment, just in terms of how I'm seeing publicly people talk about it, is people are thinking of buying the dip, or they're thinking it's worth a gamble, right? If anything. And I think it's also because AMD is one of those names. Oh, I have some big news for you guys. And this just triggered my memory. AMD is one of those big names, right? And because AMD is one of those big names, in general, Lisa Su, her brand, right? People get excited if a big name takes a massive dip, because everyone thinks that's the time to buy. The question is, why does that name take a dip? And I think that's what we're going to have to find out over the next few months. Now, because I'm talking about this, I just remembered something that I got to show you guys. This was a pretty big deal to me. Okay. This has not happened for the past 5 years. It happened in the month of January. And I saw this, and there's a way to interpret this as kind of bearish, but there's also a way to interpret this as super bullish. I think it's more bullish to me than bearish. And I just think it's really cool. Okay, so here it is. Every month, Robinhood publishes the top 10 stocks on the platform. And for the really past year, it's been Nvidia, Tesla, Amazon, blah, 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 GameStop, AMC. I'm very annoyed that that's still there, but like whatever. A new stock has joined the top 10 list. And ladies and gentlemen, Palantir is one of the top 10 equities on Robinhood. It's not AMD, it's Palantir. So you got Amazon, Apple, Meta, Tesla, Nvidia, Microsoft. No surprise. You have Disney, which I don't know why that's there. Ford, I think people got a free Ford shared like 5 years ago when they signed up to Robinhood, and that's why it's there. Meta makes sense. GameStop, which is annoying because it's GameStop, but nonetheless, you got a lot of Robinhood degens buying GameStop. And then you got Palantir. Now, let me say why this is bearish and bullish. It's not really bearish. The only reason I feel a little bearish about this in the context of people that bought Palantir is because Palantir did not show up here all through the run. Like when Palantir was at $80 and the market cap was $200 billion, the value of people's Palantir on Robinhood, including mine, went up a lot. And you would think Palantir would crack the top 10, but it didn't. And so to me, that means I think a lot of retail might have bought Palantir in the 70s and 80s. And, it is what it is. I've been saying every day on the show, I've not bought Palantir. Last time I bought Palantir was $25. So I have not bought Palantir in a long time. Valuation at 70-80. We had an entire Palantir weekly episode dedicated to the fact that, look, things go up and down, and you can't be that surprised if Palantir goes down. And from the comments I got on the Palantir weekly podcast, most people were pretty receptive to that message. I mean, the entire community, there's a couple people that think Palantir is getting to $3 trillion by February 2026. Literally, those were some of the comments. But outside of that, and they were dead serious about that. Outside of that, 99% of people that watch Palantir weekly in the comments were like, yeah, dude, we kind of expected it. Like we're bullish, but yeah, it got to $80, 85. Like we get it. Seeing Palantir get on the top 10 list on Robinhood in January, to me, seems that I think a lot of people might have bought it in December because it would have got there earlier when it was rising up, right? Because in general, the assets under custody, in particular for Palantir on Robinhood, would go up, but it wasn't, which means you needed a lot more people to buy in, and that probably happened in December. I don't love that because as much as I love that the retail community has made so much money off Palantir, it's changed so many lives off Palantir. That's for the people that were in it before it took off. When you get in it, when it takes off, you've just got to have the assumption that it could come back down like a normal stock does. And so we're going to see, we're going to see. I think the max pain on Palantir is 50. Maybe I'm wrong on that. That's when I get really excited to buy a lot more. And maybe if Palantir does fall down to, $40, $50, we see the assets under custody on Robinhood go down, which means Palantir gets out of the top 10 holdings. But if Palantir is in the top 10 holdings because retail YOLO'd in at $80, $70, it's going to be tough for some of that retail. If we get a correction, and I think going to 65 is not really a correction, but if we go to like 45, 50, that's a harder, dip that people have to deal with. And by the way, Palantir could have an amazing earnings and they could still get hit simply because the multiple is extended, right? And it doesn't take a rocket scientist to understand that this is what happens all the time in the stock market. We've been blessed for the past year and a half to not deal with that for Palantir, but we were also pretty annoyed for 2 years when that happened. Granted, the whole market was down those 2 years, but Palantir uniquely was in a tough position. And that position could happen again at a different level if the market takes a little bit of a fall. But the reason it's bullish is because I like that, Robinhood, to me, is like the best investing platform in the world. Someone tweeted to this, like, what's the best investing app? And Vlad tweeted under, I think it's Robinhood. And then I commented, it's Robinhood, no question. Like, I think you got to be high on crack cocaine if you think there's a better mobile app than Robinhood. Yes, Robinhood's not perfect. Schwab has different features, Fidelity, but we're talking about mobile app. It's not SoFi, it's not Public, it's not Schwab, it's not Fidelity, it's not M1. Like, this is not a debate. Robinhood is the best mobile app on the planet when it comes to investing. And it's nice because I love the company. I follow the company. I own a lot of stock in the company. It's nice to have Palantir, which is, the company I've been following for the past 5 years, be a top 10 holding on Robinhood. I've checked. This comes out every second of the month. You can go to robinhood.com/investorsindex. Every month I check to see if Palantir makes it in. I check for two reasons. Number one, I check to see if GameStop and AMC finally made it out. I'm sorry to my GameStop AMC fans, but I don't like those. It's not a good look for the brand that GameStop is the top 10 holding on Robinhood. I'm sorry. I don't care what anyone says. It doesn't look good that GameStop is a top 10 holding. And then the next thing I want to see is did Palantir make it in? And I was really hoping when Palantir was like in the 20s or 30s or even 40s that it would make it in, but it didn't make it in until it got to 80. And so either that's, the general stock went up, everyone's assets went up, or that's a lot of people bought it at 70 or 80. It's either volumes went up on Palantir, which is why I got into the top 10, or the stock made so many retail people rich, quite frankly, and that's why I got into the top 10. It could be one or the other. I kind of think it's the latter because it took time to get into the top 10. And so we're going to see. We're going to see. Palantir replaced AMC on Hood. That is correct. Palantir did replace AMC on Hood. Admit you use Webull, but you say Hood is the best. So Hood is the best mobile app. Hood Legend is not the best desktop trading app. I will be dead honest about that. I'm pretty objective on this, dude. Like Robinhood's desktop trading app. And I told Vlad to his face, I was like, dude, we had 19,000 people between me and Jose streaming NVIDIA earnings. And I tried to use Hood that day and I loaded up and like, everyone's like, what stock is this? Because you can't even see the ticker. Like it's just, and I told him, I was like, dude, like we got it. And he was like, he's like, we know, we're working on it. I was like, all right, good. But until you work on it, I can't use it. So, but in terms of mobile apps, dude, it's Robinhood. Robinhood's it's the best mobile app ever. It's like, it has to be. Nonetheless, that was the bullish piece of news on Palantir. So I like that it's in the top 10. Just seeing Palantir warmed my heart. I was so happy, but I am a little worried that a lot of retail got in at 70 and 80. And if they did, if we get a correction, they got to be ready for that. It is what it is. You got to be ready for that. Granted, I do think institutional holdings was the real reason Palantir went up to 80. I just don't think retail has enough money to move it that high, even if we are a top 10 stock. But we're going to see how bullish those institutions are as we get into the latter half of the year based on Palantir's earnings growth. Here's another chart that I liked. Mega Cap 8 forward PE has come down, the highest that's come down in the past 37 months, which is nice. It's nice. We have started to see a little bit of compression on the large caps. Again, most people are waiting for a full 10 to 15% for it to really come down, but it's come down a decent amount since Trump got elected, which is not horrible. And as long as these companies can put up amazing earnings, which I think they will, maybe those earnings multiples can expand or at least stay where they are currently right now. Amit, what are your thoughts on small caps moving forward? So this is a good discussion given I just showed the PE chart of the Mag 8. I'm going to do a poll on this. I want to see where sentiment is here. I still think that small caps are not the place to be. So this is my question to the chat. Do winners keep winning? And before you answer yes or no, winners keep winning means that the Mag 7 will keep winning and that's the place to be. No is you're going to need a rotation out of the Mag 7. My answer is yes, bro. My answer is yes. And I've heard every single CNBC analyst. We had one of them on the show from Robinhood, ironically, Stephanie Guild. And I asked her, what does she think about small caps? And all of them say the same thing. Small caps is the place to be, or at least mid caps, and trim your large caps. And I still feel like all of them are going to be wrong. I still kind of feel like all of them are going to be wrong. Now, granted, can small caps go up 10% from here? Sure. But I don't know who the hell is selling NVIDIA, Amazon, Meta, Tesla, Apple, etc. for small caps. I'm just flabbergasted that that's the mainstream narrative. And you know why I think it's the mainstream narrative, to be honest? I think most of these analysts need some new research to sell and they need a new idea. And if you just say buy the Mag 7, why would I pay you? Because then I would just buy the Mag 7. But if you can tell me, well, there's going to be this sector rotation out of the Mag 7, because if you look at the PEs, and the PEs historically trading from the past 10 years and the price to sales multiples on the small caps are significantly lower, the lowest they've been since 1995, which actually is correct, then that's an interesting idea. And because of that idea, I keep paying you to give me advice, and then I take your advice, and then I trim my Apple, whatever, and I buy small caps. But is that the actual right thing to do? Is that the right thing to do? Would you consider SoFi a small cap? So small caps are technically below 5 billion, if I'm not wrong. SoFi's at 17 billion or whatever. I personally consider it a small cap simply because I think small caps are more so like 20 billion and below, but technically it's not a small cap. But to me, SoFi, I wouldn't characterize them as a small cap. In general, the way I think of them is a financial, and I think financials are going to do great in 2025. So I think SoFi is going to do good. But like IWM, which is where Tom Lee's been preaching for a long time, and I disagree with him on this. And look, he's been wrong for a while. I think eventually he'll be right. The question is going to be, at what cost is he going to be right? And the way Tom Lee ends up really becoming right on this is if rates start coming down significantly because inflation comes down, aka interest rates come down because we don't have inflation. But if CPI is projected to go up in January and probably in February, given oil spiking, And then in March, we're, like if it's not coming down anytime soon, unless we get a nice shelter decline, I don't know how small caps keep going up. I just don't get it. George says winners win, but the market rotates. I look at history. That is fair. However, I think historically, we don't have that much precedent for 7 companies being the most important companies in the world on an actualized basis. What do I mean by that? We've had moments in the past where we've had centralization of companies and of like earnings growth. And here's a chart to kind of clarify that. But it's never been to the level of the Max 7. And so here's a chart to kind of make this more intact. In 2000, the 7 tech bubble leaders was Microsoft, Cisco, Intel, Oracle, IBM, Lucent Technologies, and Nortel. On aggregate, they were 19% of the US market cap. The Magnificent 7 are 31% currently of the US market cap. Cash as a percentage of market cap. In 2000, the top 7 companies had 2%. The Max 7 have 4.2%, which means they have more cash. The 24-month forward PE, 2 years out of the Max 7 in 2025 is 23.9. In 2000, it was 52. You were paying double in 2000 what you were paying currently for, quite frankly, shittier companies than what we have today, just in terms of where AI is going. Which means when you look at it from that perspective, it's hard to say that the Max 7 are incredibly cheap. I mean, any company trading at a 23.9 forward earnings going out 24 months is not necessarily considered expensive, especially if they're growing at least 15%. And then the net profit margin on the Max 7 in 2025 is 28%. In 2000, it was 16%. So the reason I'm kind of against the historical argument about rotation is that, do these numbers that you're looking at right here look like a reason to rotate? That's the question. And I don't know. I don't know if that's a reason to rotate. I really don't know if that's a reason to rotate. And so if that's not a reason to rotate, then I think we're going to be good. The sources on this are DataStream, FactSet, Goldman Sachs, Global Investment Research. And this is of September 2024, which means these numbers probably should be even better because we've had a little bit of a haircut since September 2024. I mean, Tesla's obviously gone up really well, but some of these other names have not done as well in the Max 7. So this is from Goldman Sachs. Essentially, they're saying when we aggregate the data, it looks like the Max 7 are not in a horrible situation, which means who the hell is selling their Apple or their Microsoft or their Meta for some random small cap? And again, I don't think it's crazy to sell your Amazon to buy SoFi, because SoFi could have a really good return in 2025. Amazon might be lackluster, but that's a very specific quote unquote small cap. That's not even technically a small cap that, has a thesis around it and you develop some conviction, yada, yada. In terms of the general aggregate index of the Russell 2000 outperforming Amazon this year, I don't know. Especially if people have jobs. Guess what? They're going to buy shit on Amazon. I spent like $100 on Amazon over the weekend, right? Like I bought some more shit on Amazon. It's just like Amazon is Amazon, bro. It's Amazon. Google is Google, dude. YouTube is insane. YouTube's growth is crazy, bro. And YouTube's growth is gonna get even better when TikTok is officially gone on January 19th, which it looks like the Supreme Court's not giving them an extension and TikTok's not going to sell themselves. So 170 million people are just going to flip to YouTube Shorts or Instagram Reels, and that's only going to make them bigger. Like winners are going to keep winning when it comes to global advertising and social media. So I don't know. It's just really, really hard to get on the small cap rotation train right now. Rango says Russell is full of dog shit companies. That's also another problem with Russell. I mean, dude, I'm getting to the point where I legit just want to buy 10 shares of every Max 7. It would cost me like 20 grand if you do the math. I was doing the math today, and I was like, you know what? Like, let me just 10 shares of every Max 7. And I'm probably, if I buy them in the next week or something, it's probably going to be buying them at a premium, given if, we get some pretty bad Trump volatility, I could get them at a discount. But at this point, I'm just like, I kind of just want to own every single, even Apple, which I don't like, and Microsoft, which I don't like. But I'm still just like, you know what? I kind of want to do, I want to get to the point where I have 100 shares of every Max 7. I wouldn't mind that. I really wouldn't mind that at all. And I think that 100 shares of Max 7 are just QQQ in general, right? I think it outperforms IWM. I really think it outperforms IWM going into 2025. Rest in peace, TikTok. Yeah, dude, TikTok's done. TikTok's done. Supreme Court. If you guys listen to the oral readings on TikTok or oral court case on TikTok on Friday, the justices were just like not taking TikTok shit. And I think it's going to be very, very surprising if somehow there's a 5-4 decision to keep TikTok alive, especially because you're going to need, you have 3 liberals on the Supreme Court. You're going to need participation by the liberals and 2 conservatives to get TikTok an extension. Now, the problem is 2 of the conservatives might vote yes for it if they're buddy-buddy with Trump and they want to get Trump a good deal. But then it becomes a question of just like, are they really going to like just do it for Trump, which probably has happened in the past, but on this matter, when it comes to national security, do they actually do that? And then, so if the Republicans vote for it, or the conservatives vote for it because they want to give Trump a win, and the liberals vote for it, the liberals don't want to give Trump a win. So why would the liberals vote for it? It begs the question, right? Like, why would liberals be okay with, like, if the only reason we get 2 conservative justices to vote for this, it would be because they're doing a solid to Trump, in my opinion. Which means, so why would you get the liberals here? Like, unless the liberals like TikTok, which in general, Democratic politicians do like TikTok. I mean, AOC, these guys have actually been pro TikTok, but they had to vote against TikTok to get money to Ukraine because the bill that they passed back in September, or I think it was July, only banned TikTok if they allocated capital to Ukraine. So it's going to be really weird what happens, but in my opinion, I think TikTok's done. And if TikTok's done, Meta and Google, I think they catch a little bit of a bid. William says, Amit, take a look at GameStop. Look, I will never buy GameStop, but GameStop does have $4 billion of cash. And so if Ryan Cohen can do anything with that $4 billion of cash, trading at a $14 billion market cap, what is that? 4 divided by 14, 28% cash. I mean, look, I thought he should have bought Bitcoin a long time ago. He didn't do it. I don't think he's going to buy Bitcoin. So GameStop down a little bit overnight. I just don't trust Ryan Cohen at all. Tesla at 390 right now. I just don't trust him. Bitcoin, by the way, down from 95 to 94.2. So who knows? Maybe they end up doing something good. And if they do, I hope everyone does well. But I don't trust Ryan Cohen at all. At all. Zero level of trust in Ryan Cohen. And so I can't do it. Even though it is attractive. The balance sheet looks attractive, but it's just the business is failing. It's dying. It's decreasing year over year. Although I think they did have a little bit of EPS growth. So there was some growth in last quarter. But I don't know what the vision is for GameStop. And until we get any meaningful vision, I think it's hard to buy it. Oh, hell yeah. I trust Zucks way more than Ryan Cohen, dude. Yeah, people are freaking out. So again, if you guys didn't see what happened over the weekend with the Joe Rogan pod, Zucks came out and he basically said there's a crap ton of censorship and that we need to, that Biden was responsible for it in terms of COVID. Let me play this one minute clip right here. My take on this is I don't care if you think Zucks is a snake or a lizard. If he's actually changing policies, that's all that matters. Like, I get it. He should have done this before. He should have stood up. This is why I respect Elon a lot more than Zucks, because Elon, in the face of all this censorship, stood up and paid a premium for Twitter to sort of free the American public in terms of being able to have a platform they can speak on. Zucks is doing it now when it's politically available to him, but nonetheless, he's doing it. And I think at least we have to be thankful for that.
When it went from, 2 weeks to flatten the curve to, and like in the beginning, it was like, okay, there aren't enough masks. Masks aren't that important. To then it's like, oh no, you have to wear a mask. And, like everything was shifting around. It just became very difficult to kind of follow. And this really hit the most extreme, I'd say, during the Biden administration when they were trying to roll out the vaccine program. And I'm generally like pretty pro rolling out vaccines. I think on balance, the vaccines are more positive than negative. But I think that while they're trying to push that program, they also tried to censor anyone who is basically arguing against it. And they pushed us super hard to take down things that were true, right? I mean, they basically pushed us and said, anything that says that vaccines might have side effects, you basically need to take down. And I was just like, well, we're not going to do that. Like, we're clearly not going to do that. I mean, that is kind of inarguably true.
Who is they? Who's telling you to take down things that
it was
that talk about vaccine side effects?
It was people in the Biden administration.
So now that Zucks is getting rid of DEI, which was also the news on Friday, those were the major headlines, that DEI at Meta is officially gone. They put out a memo, and there is no more diversity, equity, inclusion sort of resources that the company is going to be allocating to. You've got a new world in Meta, at least for now. And so, yes, if Harris had won, would he have done this? Probably not, which is why I think a lot of people don't respect him. But nonetheless, this is what's happening. There was another headline that the tampons that were in men's bathrooms are being ordered to be removed at Meta offices. And they're kind of saying we're done accepting certain ideologies. They're even moving their trust and safety teams out of California into Texas because of how much Zucks is basically saying, California's a bit too biased. So you're getting a new world in the context of Facebook, which I do think ultimately will yield better shareholder returns as the company's a bit more focused on momentum and progress versus some of the other things they've been focused on over the past couple of years. In terms of quantum, we also got a quote from Zucks. He agrees with Jensen. He thinks quantum is not happening for a while.
Making sure that goes well.
Yeah, and then what if that gets attached to quantum computing?
I'm not really an expert on quantum computing. My understanding is that's still quite a ways off from being a very useful paradigm. I think Google just had some breakthrough, but I think most people still think that's like a decade plus out. So my guess is we're going to have pretty smart AIs even before that. But yeah, I think that making sure that goes well.
Yeah. And
so he thinks quantum's going away. He was against, or he's now against the Biden censorship. And the last sort of hot take Zucks had from that Joe Rogan pod is that Apple is full of shit.
Great in a while. And it's like Steve Jobs invented the iPhone, and now they're just kind of sitting on it 20 years later. And they actually, I think year over year, I'm not even sure they're selling more iPhones at this point. I think like the sales might actually be declining. I think part of it is that each generation it doesn't actually get that much better. So people are just taking longer to upgrade than they would before. So the number of sales, I think, has generally been flat to declining. So how are they making more money as a company? Well, they do it by basically like squeezing people. And like you're saying, like having this 30% tax on developers, by getting you to buy more peripherals and things that plug into it. They build stuff like AirPods, which are cool, but they've just thoroughly hamstrung the ability for anyone else to build something that can connect to the iPhone in the same way.
So those were his hot takes. He is totally changing the DEI initiatives of the company. He is bearish quantum. I know he said he's not an expert, but the point is he's not giving Joe Rogan any optimism around quantum. Same thing that Jensen said, at least in this time frame of the next couple of years. And he also thinks Apple is headed down a wrong path. Now, the quantum names do trade overnight, and IONQ is down 8%. D-Wave's down a whopping 9%. This was after hours. No, D-Waves is down after hours on Friday. So after hours on Friday, it fell 9%. IONQ trades overnight. It's down 8%. And that's the only overnight name. Rigetti also fell 9% after hours on Friday. I don't know why the quantum names fell on Friday after hours. Like they were, like Rigetti was down 11% on Friday, and then 9% it fell on after hours. Don't know why. D-Wave was down 5% on Friday, and then after hours it fell 9%. And then IONQ is the only one that trades overnight that fell 4% after hours on Friday and then fell, and now it's down 8% overnight. So again, in the context of quantum, I mean, we're going to see this is the first real dip that quantum is facing right now. And because this is the first real dip quantum's facing, we're going to see if they are ridiculous hype bubbles and they're super far away, or this is like one of the best dips ever because the volatility to the downside is creating a great buying opportunity for a lot of people. One thing that's important to look at when we think of the quantum names, I mean, if I just pull up Rigetti's chart over the past 3 months, it's still up 9x. Even with that, look at this chart, dude. It's down a lot, like over 50%, but it's still up 9x in the past 3 months. So I think this goes. You have two interpretations of this. Either this thing is going way down further because even $8 is not justified, or the fact that it's still up this much after being down 50% means that there is something real to Rigetti or to these quantum names in general. It's something that's undeniable, given they're not down, 90%, and it's a dip that people are going to buy. We are going to find out over the next few months, I guess. Definitely on earnings. Palantir did own a ton of Rigetti, dude. They sold it a while ago, but they owned a ton of Rigetti. And now it's gone. Yeah, it reminds me of pasta every time I think of that as well. 50% down is not a dip. That is correct. That is a little bit more than a dip. But we're gonna see. We're gonna see what happens with it. Rick says the most popular search on Google the last few days has been how do I cancel Facebook and Threads? Yeah, I didn't see this exact headline, but I have seen people on Threads in particular talking about how do I get off this app because people were super upset. So internally, Facebook culture is not like X culture. First of all, Facebook has 70,000 employees. X has like, I think, a couple thousand. Most of X employees that cared about DEI were fired. So the ones that are left are, they kind of agree with Elon's politics. Facebook's headquarters are in California. I mean, you've got a lot of people that believe in diversity and equity, inclusion, and they like really care about it. So to get this kind of 180 from Zucks, I'm also curious. That is actually a good point to bring up. Theoretically, if that destroys employee morale and potentially the culture, and it gets people, acting up, etc., that could be bearish, theoretically, for the stock. Granted, I think all the people that are searching how to get off Facebook, they're not canceling Facebook. They're not canceling Threads. They're going to be back there, because their friend's cousin's daughter is going to post their wedding pictures and they're going to want to see that content, and that content's probably going to be on Facebook, and so they're going to log back into Facebook. And, it's like, this is the thing about Zucks. This is why he's so polarizing. Everyone's attention, even though I don't use Facebook as much anymore, there's still 4 billion people a day that use Facebook. And if there's 4 billion people that use Facebook and he's in control of who gets to say what they want to say, in general, people think you want a little bit more of a free environment versus a censored environment. But you've got a lot of people that believe in that censorship because they believe in misinformation and DEI and all this stuff, hate speech, yada, yada. So it is going to be interesting to see if people actually leave the platform because of this, which I think is not going to happen at all, even if they say they're going to leave. Just like people who say they're going to leave Twitter. I mean, no one left Twitter. Everyone's still on Twitter. Or do the employees kind of do a 180 and that actually messes up culture in the company? I think over the next couple of weeks, we're going to find out how that navigates as well. Do people actually use Facebook in the chat? Put in the chat if you use Facebook. Now, let me do a poll on this. Let's get some numbers. By the way, 85% of you said winners still win. So it looks like most of you guys are Mag 7 bullish versus small caps. Do you use Facebook daily? Like, you actually open the big blue button on your phone and you open up Facebook? I don't, bro. Like, I mean, sometimes here and there, but I'm on it right now, and it's like, I don't know, dude. The content's not good. Like, it's X and YouTube. That's it for me. X and YouTube. Instagram here and there, but X and YouTube, that's it. That's what I do. 65% say no. All right, so 35% of you still click on it every day. So, look, even in this small sample size, there's still 35% of people that are on Facebook every day. The real question of it is, do you use WhatsApp and Instagram? Yes, I use WhatsApp all the time. I mean, WhatsApp, and so that's why it's meta, right? Like, you might not use Facebook, but WhatsApp, God, I mean, dude, I'm on WhatsApp like all day. I have so many groups on WhatsApp, and I get a lot of, I get business done on WhatsApp. You talk to so many people on WhatsApp, and so especially internationally, everyone's on WhatsApp, which is really bullish meta, dude, because they barely monetize WhatsApp right now. But in terms of the real moneymaker, Facebook, they're still compounding really great revenues, even if people are not using it as much anymore. Okay, a couple super chats, and then I'll ask one question, and then we'll be done for today. I'll try to get you guys out of here and not keep you for 2-3 hours. But I asked the question on Twitter over the weekend, and I'm curious what you guys have to think as well. In terms of, before we get to super chats, in terms of the broader market news, that's pretty much it. So CPI this week's going to be very important. We had Zucks make some headlines on Friday. TikTok ban coming up soon. Trump inauguration next Monday. I'll be streaming that the whole day. That's going to be very important. Oil is up. We're going to see how the 10-year reacts to that tomorrow. CPI on Wednesday is really going to indicate if the 10-year goes to 4.9 or if we get back to 4.6. And then overnight equities are slightly down, probably going to open up slightly down tomorrow. But there's no real big dips outside of quantum that I think are super exciting. And we're getting into earnings season this week, which is going to determine if we start dipping or if we really start producing results that the market wants to see. These are the earnings to look at this week. Let me just share this right here. We've got Goldman Sachs, we've got JP Morgan, Citibank, Wells Fargo, BlackRock, TSM. That's a big one for the semis, which they're going to crush. TSM's absolutely going to crush it. UNH, Bank of America, Morgan Stanley, Schlumberger, TFC, Truist. So we got a lot of earnings this week. Banks, oil companies, semiconductor names. And we start off 2025. Also, January 29th is going to be crazy. January 29th, we have Tesla, Microsoft, and Meta. You know what else is happening January 29th? J-Pow speaking. So I think I legit will be live for like 8 hours on Wednesday, the 29th. It is going to be insane. It is going to be absolutely insane. Wednesday, January 29th, J-Pow, and then 3 of the Mag 7 all at once. So that's going to be another day you want to keep on your radar in the next couple weeks. Okay, some super chats. Nicholas, thank you for the $2 super chat. Tonight, Blue Origin launches a rocket. Really? I did not know that. Blue Origin rocket. Okay, that's super cool. Yeah, you're right. That is happening tonight. All right, super cool. Hopefully that's successful. That's good for Rocket Lab, SpaceX. That's good for the whole industry if that market keeps growing up. Rob, thank you for the super chat. Amit, based on your FSD experiences, Uber doomed? No, I think FSD is still unsupervised FSD to the point where there's a massive robo-taxi is still far away. At least a couple of years, if that, right? Because, you know, Texas and California, it's going to start up, but then to go worldwide and take away Uber's 150 million users for them to use FSD is, I don't think that's happening anytime soon, dude. So I think the Uber dead narrative is pretty overhyped. I do think eventually there's a world in which Uber probably doesn't have as much market share, but does that mean the company goes out of business? No, especially if they have partnerships with Waymo and stuff. So I don't think the Uber dead narrative is real, to be honest. I think it'll be here for a while. Tesla would have to show such amazing execution in the next 2 years of taking market share, which they're going to execute. I don't know if they're taking away that much market share in 2 years, but over the long term, I think they will. So I don't think Uber's doomed, but you know, it's one of those things where I think it's not the most exciting stock to be in over the next decade. And then Rob again, admit why not move to New York? New York taxes are insane, and New York rent is also insane. So I like being in Jersey City. It's like 40 minutes away from my parents. You get a view of New York without having to be in New York. You don't have to pay the New York taxes, and you're an 8-minute train ride away from New York. So that's why I would like to live in Jersey City instead. Blue Origin does use Palantir, correct. For those that don't know, Blue Origin does use Palantir. Blue Origin does use Palantir. Matt Money is streaming Blue Origin. All right, so this is what we're gonna do. I'm gonna ask you guys one question, and then Matt, are you live right now? We'll just link to Matt's stream, and then you guys can head over to Matt's stream to watch 12. Oh shit, it's at 12:50, bro. Holy crap, dude, Matt, you're gonna be awake that long? Damn. All right, well, here's Matt's stream at 12:50, which is 11:50 Central, 9:50 Pacific. There it is. You guys can keep that on the radar. Yeah, I'm gonna be sleeping. I want to wake up early tomorrow, and I want to go to the gym at 5 a.m. You guys hold me accountable. When I start the market open, I need you guys to say, Amit, did you go to the gym? And I either take a walk of shame if I say I didn't go to the gym, or I say, yep, I went to the gym. I'm gonna take a picture of me at the gym to prove it. So I want to sleep early tonight. I've been going to the gym, but not early in the morning, bro. And I want to do it in the morning. I want to get it over with at 5 a.m., move on with my life, and then like get that part of the day out of the way. So that's my goal tomorrow. Okay, so here's my question for you guys. We talked about pretty much everything we need to talk about. I've been thinking of this question for a long time, and then I tweeted it on Saturday because I was very curious. So I'm going to put the poll in the chat as well. Let's see who wins. But if you had to give one professional money manager your entire net worth, assume they're in their prime, even though I know some of these guys are older now, but assume they're in their prime, who do you pick? Who do you pick? So we got Zucks, we got Buffett, prime Buffett, we got Ackman, and we've got Dalio. Put the poll in the chat. Who do you pick? The number one response from Twitter was Druckenmiller, which would have been my pick as well. And I think people probably could have guessed that because Druckenmiller, A, he bought Palantir. He likes Palantir, so I like that. But B, he's more on the growthier side out of all four of these guys. And he's able to take calculated risks even if he's wrong, because his philosophy is kind of like invest, then investigate. And I think these three guys are more so investigate before invest, especially Buffett. Buffett is not going to pull the trigger without enough due diligence. So I think Druck's a little bit more risky. And I like his style. And by the way, he got NVIDIA right. He got the AI revolution right. In 2022, October, he bought NVIDIA at 150, and he bought a lot of it, and Microsoft. So I think he bought Microsoft at like 270. So, wow, Buffett's winning. You guys picked Buffett. 50% of you picked Buffett. 5% picked Dalio, 15% Ackman, 31% Drucks. Look, Prime Buffett can't be a wrong answer. So I think Prime Buffett would be fine as well. I just like Drucks, bro. I think Drucks has a little bit more of a basis to see the future and to see where trends are going. Pelosi was actually the number one answer in the comments. That's what I did. I probably picked Pelosi as well over Drucks. But I like Drucks. I think Drucks is the best. Chris Camillo, dude. Chris Camillo as well. You got to be super high risk for Chris Camillo, but Chris Camillo could get you some pretty astronomical returns. Keith Gill, if you are in the right moment, Keith Gill could also YOLO in. But I would pick Drucks. Michael Burry in 2008. Dude, I told you guys I watched Big Short over the Thursday break that we had. And so I have a greater appreciation for Michael Burry in terms of what he was able to figure out. But, you know, it's hard to find that bubble every single time. Peter Thiel's up there as well. Yeah, I mean, these are all good picks. But I was just thinking of this idea, like, out of these four, these are like the four biggest ones that I know that are like professionally. This is what they do for a living. Because Peter Thiel, you know, he invests in startups really. He doesn't really manage money for public markets. These are the four guys. And it's interesting to see. Most people said Drucks. He's betting on China right now. That is true. He is betting on China right now. A lot of these guys are actually not that big into Max 77. I mean, even Ray Dalio, which I don't think he manages Bridgewater anymore, but you know, Ackman is Google, Buffett is Apple, barely any of it. Drucks is out of all of his NVIDIA, if I'm not wrong. I think he still has some Microsoft and some of the other Max 7, but he has a lot more of the mid caps. And then Ackman's big bet is also Nike, along with Google. Currently right now. To be honest, I trust you with my guy. Dude, people are saying that in the comments. I'm like, I am not 1%. Forget 1%. That's an embarrassment. I'm not 0.0000001% as good as any four of those guys. And I don't think I'm ever going to be in the business of managing money because you got to have a different set of balls to be able to manage money. But I was kind of humbled that people actually said that. But no, there's no way in hell that would ever happen. I mean, those four guys are legends, dude. They're absolute legends. I mean, all four of them too have different moments. Like Dalio in what was the thing Dalio shorted? Was it Greece's currency? It was or that was Drucks. Dalio in 2008 did something. You guys can help me out here, but he did something where he bet against either a currency or a country or a bond yield, and it totally like worked for him. And then Drucks in 2000, I think he bet against Greece. I think it was Drucks. Buffett, obviously legendary. Ackman with Chipotle. I so wish as a market historian, by the way, Tesla is still down 1% right now. I wish Ackman didn't sell Netflix because then that would have been his go-to trade of all time. To get Netflix at 350, ride it all the way down to 150, have it be, you know, basically written off as like the worst company in the world. And then to double down on that and to ride it back up to basically 1,000, legend. He's already a legend, but that would have cemented it as like undisputed legend. He would be up there, I think, in terms of the greatest of all time conversations because he's got another 40 years to execute as well, or 20 years to execute. But he let go of Netflix. And when he talks about letting go of Netflix, Bill Ackman actually talks about the fact that it was a sign of personal maturity for him because he was down 400 million, and the old Bill Ackman, in his words, would have stuck with the trade and like put his investors at risk, right? He wouldn't have had as much risk management. Unfortunately, Netflix did end up, you know, sticking with it would have been the right choice, but he cut his losses. And so personally, he felt it was a good thing to do. But in general, if he had held on to it, it would have been so cool because it would have been the goated trade. It would have been the goated trade. Jim Simmons, I didn't put on the list, A, because he passed away, rest in peace. But B, I thought Jim Simmons was too easy of an answer because he averaged 40% for 30 years straight. And so I think when you look at that number, everyone easily can just say, oh, well, this guy outperformed all of them, so I'll pick him. Whereas these four technically have performed the same over the past 30 years. Ackman, Dalio, Drucks, and Buffett. So to me, I thought Jim Simmons, it was harder to put him on the list because he's such an outlier that it would be too unfair to the other guys. Even though, you know, you could argue the other guys, you know, people argue are definitely better. He was a bit more of a trader than I'm. Yeah, 66%. Sorry, that's the right 66. Like, who can argue against that, right? Everyone would pick him because it's just the best return. But if everyone's doing 30% a year, 25% a year, then it's a question of whose style did you like better and who would you trust? Yeah, I think I am talking about George Soros, who shorted. Dude, hold on. What is it? I should know this. Did George Soros short? Oh, the British pound. That's what it was. Yeah, that was the one. Yeah. Yeah, it was the British pound. See, Buffett never shorted a country. I could be so wrong on this, but from my understanding, Buffett's big move was 2008. Yeah, and a lot of people forget, Buffett sold $35 billion of puts on the S&P 500 in 2008. He had a notional value of 35 billion of puts on the S&P 500. He wheeled the market when it was crashing, and he collected 5 billion in premiums. Because his argument was like, hey, if the market's going to go up, this is easy premium to collect if the market's bottoming. So he called 2008 so right. He got like a 20x on Bank of America, Goldman Sachs, gave them all the money. So like, I think Buffett's big shining moment was 2008. Dalio had stuff in 2008 as well, working with other currencies. And then Soros had the British pound. Ackman, again, outside of Chipotle, I can't really point to like that moment because the Herbalife thing didn't work out. Netflix would have been that moment, but it didn't happen for Netflix. Yeah, Peter Lynch. I just forgot about Peter Lynch. He just wasn't on because he's still not operating a fund on the day-to-day, right? So I was looking at like the actual holdings, and from my understanding, he's not really operating a fund as actively. So I wanted to pick 4 people who are at least semi-active currently right now. But Lynch is up there. Lynch is definitely up there. Peter Lynch is alive, correct? Yes, Peter Lynch is alive. Jim Simmons is the only one who's not. You guys have some funny comments. Martin Skrelly, well, the MicroStrategy short has done very well. Yeah, Jim Simmons was definitely a cheat code. Amit, did you buy more Grab? Yes, I bought a little bit more Grab on Friday. I think Grab is getting sold off because of the dollar. It is not getting sold off because it's a bad company. The Motley Fool actually just pumped Grab on an article this morning, and they said this is a top 3 stock of 2025. I don't really read the Motley Fool, but the point is, they have a lot of people that go on the website, so that could be something that helps it tomorrow. But in general, dude, the cheaper Grab gets, the more excited I get. Like this is one of those moments where you have to be like, okay, so I got in at 490, $5, 470, whatever. Is it going down because I'm wrong on the thesis, or is it going down because of something external? And if it's something external, then that's got to make you excited. At least it makes me excited, because I think I'm going to make a lot of money off Grab over the next couple of years if I'm right about where I think their trajectory is going. And in general, if I'm right that the US dollar is going to relax and this whole currency exchange issue, which is the only reason, in my opinion, that Grab is down from 570, because they had a phenomenal Q3, great guidance, great EBITDA margins. Like, this stock should be closer to $6 right now. The only reason it's down because of the dollar. So that's great. That's a great opportunity, in my opinion. If you believe in the company, that's where I get excited. Now they just have to issue like at least 450 to 500 million of EBITDA guidance for 2025, which I still think is sandbagging. And if they do that, then I think Grab ends the year closer to $7-8. It's not going to be easy. It's going to be volatile, especially with the dollar. We might go under $4 if the dollar spikes and we have more inflation, yada, yada. But I think the thesis on the company is and my conviction on them is very, very strong at this point. Okay, so I want to end it off by showing you guys this clip of Bill Ackman actually talking about Netflix, because he did this clip 2 years ago. And he kind of walks through why he ended up selling the name. Let me see if I can find it. Actually, I tweeted it a while ago. Let me see. It's funny. I go to Twitter to tweet or to Google to search my tweets, because Twitter's search is so bad, but Google search is so much better. Twitter's got to fix that, bro. If they can fix that, like, it would be a lot easier to use their platform. I'm buying the $7.50 $10 debit spreads on Grab, but I like the $10 leaps as well for Grab. What about Fubo? I don't know about Fubo, bro. Fubo, it already made its run. But again, I know nothing about Fubo, so you got to take my words with a grain of salt. There are some people that still believe Fubo's amazing and there's a lot more room to run. I just don't like it, dude. It's in media. Like, I don't like investing in media like that. That's why I've never invested in Netflix. Like, I I would buy tech over media any day of the week. So to me, it's not that exciting, but they got a good Hulu deal, and if that helps them grow, then maybe there is some more upside. But I don't know if it's overvalued or really undervalued here. Okay, I think this is the clip. This was in 2023. No, this is not exactly the clip. This is not the clip that I'm looking for. This is not the clip. Carlson's looking pretty smart. Yeah, dude, you got to give it up to Carlson. I mean, he's the only person I know publicly that was advocating for Netflix. You got to give your flowers when they're due. The only person that actually, like, I was dancing on Netflix's grave at 150, bro. I was like, fuck Netflix. They're done. They are done. And I was wrong, because Netflix was not done. Also, the other reason it was stupid to dance on the grave at the time, is because the market was bottoming, right? So it's kind of like, in general, if the market's bottom, now obviously no one can really call the bottom, but if you think the market's bottoming, you don't dance on someone's grave at the bottom, especially if it's a quality company and like Netflix, no matter what thesis you have, there's probably still more momentum for it. Okay, I'm gonna see if I can do one more search query to find this. Well, here's this. Let me play this clip while I'm searching for the clip. This is the clip where he's talking about Alphabet. He's since reduced his position in Alphabet, but he sold Netflix to get into Google at 90. Netflix has done way better than Google. Netflix is basically 3x'd, and Google hasn't even gone up. No, Google's 1x, 90 to 190, but his average is not 90. But nonetheless, he's still bullish more on Google.
That, and it was said on this stage earlier today by somebody who sold Alphabet when the ChatGPT and OpenAI thing came out.
So we bought from them, so we should thank them. Yes.
That the ball was fumbled and recovered by the other team who ran for a touchdown and then piled on with other touchdowns. And now Alphabet may not be able to recover the leadership role that it had.
Yeah, I think that's...
DeepMind is a perfect example of Alphabet having this in-house and still fumbling the ball.
I would say they fumbled the PR around the ball. But I think they've subsequently demonstrated publicly that they are integrating AI in all of their various products. Obviously, the most obvious example is search. And they are, I think, their Bard is sort of certainly neck and neck with ChatGPT. And we think they're, if you think about the enormous amounts of access to data that they have by virtue of the various, everything from search to the various products they offer to their customers, email and otherwise, data and the ability to legally extract and train on data is a really important competitive advantage. They also have designed their own chips.
Okay, I found the Netflix clip. So here is what he had to say about Netflix. But again, his bullish thesis on Google is pretty much the same thesis we've all heard. This is where he does some more introspection around getting out of Netflix.
Ackman was Netflix.
Okay.
Was Netflix.
Okay.
You were a huge believer in Netflix. And I remember the day where that earnings report came out and that stock dropped like a bomb.
Okay.
Right?
Not like
we
a bomb,
spoke, it dropped a lot, okay?
In a meaningful way.
Dropped a lot.
For sure. Yes.
Enough that we spoke, because I went on CNBC and reported our conversation and said, that's enough. I was wrong about this. And I said, the old Bill Ackman might have said, no, it's just a moment in time. Management team's great. Company's great. I'm staying with it. The new Bill Ackman was like, no, I'm done. That's it. I'm moving on.
Because so I still think the management team is great. And I've gotten to know Reed Hastings even more since that time. I think he's a first-class person, and obviously his Ted and the rest of the team, Spencer, et cetera. I think it's an amazing company. I think what we misunderstood or misappreciated was, once they announced basically a different strategy, it became a much more disparate outcome. We still thought they would be successful. I wrote a little letter to our investors. We said, look, we think Netflix is going to be a great investment over time. But in terms of, do we want it to be one of 8 things we own or one of 10 things we own? No, because it's kind of the range of outcomes as a result of the sort of change in strategy, going to an advertising model, et cetera.
So now this is really weird, right? Because at 350, they loved it. They put a big position in it. And again, Ackman doesn't take a position unless they do months and months of due diligence. the stock falls 50%. And I'm saying this because this goes to show you how the most professional money managers even think about it. Think about stocks like retail thinks about stocks. Stock falls 50%. All of that research, all of that due diligence goes to shit. And you get out of the name, take a $400 million loss because of a pivot to advertising. Like that is not even a pivot, in my opinion. That's just like an extra tier. Netflix. That can't be the reason 10 months of due diligence goes to shit. He got scared. He got scared like a lot of us get scared, right? It is what it is. So either Netflix is egregiously overvalued for Netflix to be up 3x since then, or Bill Ackman is incredibly wrong, and that Netflix, although it's been a good investment over time, it is a way better investment than anything they could have thought of. Which, what did they think of? They thought of Google, and Netflix has massively outperformed Google. Either Netflix is overvalued and Google's undervalued, or Netflix actually deserves to be worth basically $800 billion, and Google deserves to be trading at 18 times next year's earnings.
And predicting the probability of the success of that was a different kind of hurdle for us to climb. So it's sort of the facts changed in a meaningful way. It became a different kind of investment. I would have been happy to have that as a, maybe even a 2.5% position, 3% position in the portfolio, but that's not what we do. We don't collect 30 things. We put 3% of our capital. We own, we have 22%, 25% of our capital in Universal Music. We have 16, 70% of our capital in Google. These are businesses we feel very comfortable. We can sleep at night and have a very high confidence level of what they look like over a long period of time. If a business doesn't meet those threshold characteristics, or something about the business changes where we misunderstood the predictability of the business, we're happy to sell and find something else to do. And basically we took the Netflix losses, but the capital, if you will, and we invested in Google, and it was a good decision. And we were able to make a bigger investment in a company we had more confidence in.
I think part of my point would be, just because you like the management team and you think it's a great company doesn't mean it's a good stock. And you recognized that at a moment where maybe in the past you wouldn't have, because you would have believed in it so much that you wouldn't have sold it when you did. I thought it was a moment. I did.
Okay, I'll take that.
I thought it was risk management like maybe people hadn't seen from you in the past.
Okay.
You don't accept that?
I don't think so. I think it's something we would have done in the past. I think the big difference is, look, we're very happy to buy more of something. Not everything we buy goes straight up, right? In fact, our favorite outcome is obviously the best outcome is we could get our entire position purchased and then it goes straight up. That rarely happens. What normally happens is you buy something, you make it a meaningful position, and then something happens that causes the market to either not like the stock or the market itself goes down, and you can buy a lot more of something well at an even more attractive price. We've done that all the time in our history.
You're pretty
Chipotle being a perfect example. Chipotle, we bought initially at $400 a share, and then they had a couple more food safety problems, and the stock was $250, right? Which is about the move, almost exactly the move that Netflix made. And then we hired Brian Niccol to be CEO, and we bought more. And one of the best investments we've made.
You don't do many interviews. You sure tweet a lot.
No, I don't.
All right, that's it. There we go. I think that's it for me, folks. I'll be back. I said I didn't want to take this to 2 hours, and basically I take this to 2 hours. So thank you all for joining. Hopefully you guys enjoyed. We'll be back tomorrow morning, 8:45 a.m. And yeah, it's going to be a wild week. We got a lot of earnings to start off 2025, and then CPI on Wednesday. All of that, we kind of just got to get through it before we get into tech earnings in 2 weeks. And then we see if Q4 was good. And if Q4 was good and Q1 guidance is good from Q4, maybe earnings is good enough for the market to not be too afraid. So going to be a big week. We'll cover all of it, and we'll be live every single day going into next week. I will say tomorrow is going to be very special in the market open because we fixed the cowbell. But not only did we fix the cowbell, we added some other stuff besides fixing the cowbell. That's all I'm going to say. So tomorrow morning, just be ready because we are entering a new era of the market open in terms of audio. And I think you guys are going to be excited. I'm looking at the thing that's going to be very important for the future of this market open. And let's just say, I can't tease it right now because it's not connected. I didn't connect it because I didn't want to even press anything by accident. Let's just say It's going to be fun now. When stocks go up or down, there's going to be more audio experiences, including a cowbell, on the Market Open every day. All right. Love you guys. I'll see you guys tomorrow, 8:45 a.m. on the Market Open. And I'm taking my ass to the gym at 5 a.m. And I will make sure to report to you guys that I actually went to the gym at 5 a.m. Bye, everyone. Have a good one. Good night.